Today the Nifty fell just 0.32%. But what happened inside the market was far more serious. While the index looked stable on the surface, 31 stocks slipped into the red, multiple sectors weakened sharply, and every intraday bounce was quietly sold into. This was not a normal cool-off. This was a silent sell-off hidden beneath the index. And if traders don't understand it now, tomorrow could be far more volatile. Welcome back to Wealth Maama, the place where you don't just see the market, you understand the market. Every evening we break down the Nifty with clarity, logic, and real market behavior so your trading decisions stay ahead of the crowd. Let's decode exactly what happened today. Nifty opened slightly positive at 25,864, and from the very first hour, the market showed hesitation. The index attempted a small recovery toward 25,947, but sellers quickly stepped in and capped the upside. As the day progressed, Nifty drifted lower and finally closed at 25,758, down 81 points from yesterday. The intraday low hit 25,734, which shows that buyers protected the lower range, but the lack of momentum on the upside confirmed that the market is currently in a short-term distribution phase. Why Nifty moved like this? Today's weakness was a result of a combination of global and domestic pressures. US futures were mixed, and Asian markets showed cautious sentiment as investors awaited fresh macro data. This led to a risk-off environment across emerging markets. Domestically, selective FII selling continued, especially in large-cap financials and high-valuation sectors. Crude oil remained stable, but not low enough to support sectors like paints or autos. Most importantly, the broader market breadth was extremely weak, showing that the pressure was not limited to a few stocks, it was spread across the board. Sector-wise performance. Even though the Nifty itself didn't fall dramatically, sector performance revealed the real picture. Metals, FMCG, financials, and IT all traded in the red, indicating that institutional money was reducing exposure across core sectors. Only a few pockets like automobiles, healthcare, and PSU names showed mild positive momentum, which wasn't strong enough to lift the index. This type of mixed yet tilted negative sector behavior usually indicates distribution rather than panic selling, which is why the fall looks small but feels heavy in portfolios. Top gainers of the day. Eicher Motors gained 1.54% as strong delivery volumes and improving sentiment in premium vehicles supported the stock. Buyers stepped in after the recent correction, leading to a steady upward move. Hindalco rose 1.07%, largely supported by slight stability in global metal prices. The stock also saw fresh long positions from lower levels as short covering came in. HDFC Life added 1.06% with defensive buying returning to insurance after volatility in the broader market. Investors preferred stable financial names as uncertainty increased. Tata Steel moved up 0.83%, driven by selective value buying. Although the metal sector was weak earlier in the week, the stock held firm due to bargain accumulation. Sun Pharma gained 0.70%, supported by strength in the pharma index and sustained institutional interest in defensive segments. Top losers of the day. Indigo dropped 3.17%, marking another day of weakness as higher crude expectations and profit booking weighed on the aviation space. The stock has been volatile recently, and today's selling extended that trend. Eternal fell 3.09% after heavy volumes triggered profit booking at higher levels. The stock has rallied significantly in recent sessions, so a corrective move was expected. Trend slipped 1.77% as analysts pointed out stretched valuations in the retail segment. Weak broader sentiment added pressure to the stock. Adani Enterprises declined 1.39% due to consistent profit booking across Adani Group companies. The market remains cautious around high-beta names during volatility. JSW Steel was down 1.31% as global steel price concerns resurfaced and traders reduced long positions across metal counters. India VIX. What it signaled today? The India VIX cooled slightly to 10.91, but the movement was choppy throughout the day. This kind of behavior usually signals that the market is preparing for a larger directional move. Even though the VIX is low, the intraday spikes tell us that uncertainty is building below the surface. A low VIX with weak breadth is a combination that traders should not ignore. Support and resistance levels. Tomorrow, the first support to watch is 25,680. If Nifty opens below this or breaks it decisively, the market could extend its slide toward 25,600, where stronger demand zones may come into play. On the upside, the immediate hurdle is 25,900. A sustained move above this level will be the first sign that buyers are willing to step back in. The next resistance is at 26,030, and crossing that will require strong volume and sector-wide participation. Tomorrow's trend will depend entirely on whether Nifty holds above 25,680 in the morning. If this level holds, the market may attempt a small recovery led by autos and defensives. But if Nifty slips convincingly below this support, we may see another round of silent selling, exactly like what we witnessed today. This is a sensitive zone for the market, and even a small global trigger could tilt the trend either way. So traders must remain flexible rather than overly biased. This was the complete breakdown of today's market. Simple, clear, and focused on what truly matters beneath the index. If you found value in this analysis, make sure to like, share, and subscribe to Wealth Maama so you never miss the real story behind the charts. See you in our next video.